Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa Coram, and I'm joined by Justin Nielsen. And on today's show, we're going to be taking a look at gold miners as well as Apple and following up on Netflix after its quarterly earnings report last night. But first, let's take a look at the major indexes. So we're starting off with a look at the Nasdaq here. It was a strong session following two pretty significant down days here, Justin. The Nasdaq finishing with a gain of about 2.8% and strong gains for the S&P 500 and Dow as well today.
Yeah, so for anyone that thought that volatility was gone, it's not completely gone here. We did have, kind of basically a recovery of a lot of the losses that we had from yesterday, and you can kind of see that we filled in that gap that we created yesterday. So a lot of the stocks that were looking pretty bad and looked like they could get worse yesterday snapped right back today. And you see also that the Nasdaq did cross below its 50-day moving average line and its 200-day moving average line yesterday. It was right back above those levels today. So a couple support levels to keep an eye on. You can see that the low of today was right around that 200-day moving average line. So that's going to become a pretty important line in the sand. Can we stay above that? The other important line to kind of keep an eye on is at the high from a couple days ago, around 86.85. That's going to be a good test too. Can we get up to that level and surpass it? Because that's going to kind of give us a little bit more confidence that the market is able to recover from what it saw yesterday. And on the downside, if we do see it kind of undercut yesterday's low, that really filled in the gap from the 14th of April. And so these are the kind of the technical areas that we're watching, but it would be very normal for us to get a little bit of sideways action right here. We had such a great move off the bottom. A little pause here would not be unusual. So you might kind of see it go in between those levels for a little bit.
Right. And you mentioned volatility, not gone yet, which just goes to show you why it's especially important to be grounded in your investing mindset, making sure you're following rules, because in this market, you really don't know what's going to happen one day to the next. I mean, we're prepared for anything,
yes,
but you really have to be grounded in that mindset.
And that's the key. You really have to be prepared for anything and have that plan in place so that you're not panicking. For a lot of people, it would have been easy to just, completely throw in the towel yesterday saying, oh my gosh, it's, the sky is falling. Or if you had bought things properly, you might have been looking at that as an opportunity even purchase some stocks or add to some of your positions, or at least add to them today if you just held through that. So a lot of different ways to play it. And it's not to say that volatility is like what it was in March, when we were seeing limit up, limit down each day, circuit breakers going off, but it's certainly not completely gone.
Yeah, good point. Okay, well, let's take a look at how maybe you could be handling some stocks around earnings season. Let's take a look at Netflix, which lost about 2.9% today, above average turnover here. But this comes after a pretty strong move heading into the quarterly report. It seemed like there was a little bit of uncertainty for Netflix in terms of subscribers in the back half of the year. With the coronavirus here.
Yeah.
We know a lot of people are binge watching shows now, but as the virus dissipates, that might be a different story.
Sure, the economy recovers and you have to go back to work, and guess what? You don't have time to binge watch your shows anymore. There's a big question mark there. And it's also, this was kind of a interesting one to play. We put this on leaderboard as it was breaking out, and we didn't have very much time before this earnings report. We knew that going in, but sometimes you can get a cushion ahead of time, and it just so happened that the skyrocketing action that we saw on Netflix gave us a really good cushion on leaderboard, allowed us to hold through earnings. And now it's really interesting because, you talk about the volatility in the markets, we were talking about that, but Netflix, a lot of times it could have these big moves on earnings, and 2% down, that's not much for Netflix when you look at it in the past. The subscriber numbers are something that are very important with Netflix. So there is that question: how sticky are these subscriber gains going to be? And they really blew them out. They got 15 million subscriber growth as opposed to the estimates for 8 million. And if you look back on the weekly chart, you can see that back in July, when kind of this really started getting ugly, July of 2019 there, when things really got ugly for Netflix and the base started, that was due to a big subscriber miss. So the subscribers are going to be very important for them. They did miss on earnings, and that is an issue. They have a lot of negative cash flow because they are dumping a lot of money into their Netflix original programming. So right now, if this is something that you got before and you've got a nice cushion on it, really, you're showing that this is getting support at the 10-day moving average line. So there's not really much reason to sell this right now.
Yes, that's right. Holding support at that shorter term levels. And always good to note that with your holdings, need to be aware of some of those other factors that could contribute either up or down to the post-earnings reaction, in addition to just earnings and sales.
Yeah, especially if you have a larger position, the only way you can have conviction to hold through some of these wibbles and wobbles is to kind of understand the story a little bit more, so you understand what you're holding.
Yeah, that's right. Okay, well, let's also take a look at Apple now. It's forming a handle heading into its own quarterly earnings report next week. It did dip below that 50-day line in Tuesday's session, but was able to battle back and retake that level today.
Yeah, so the fact that it's able to retake its 50-day line, and it really kind of surpassed yesterday's high, that's what a lot of stocks were doing, and that's kind of, very positive action. So will this give you enough time before that earnings report to build a cushion? Well, let's say it goes and completes this handle. That would give you a little bit of a cushion. But if you wait until the breakout, let's say this breaks out the day before earnings, that's going to be a tough buy right before earnings, because there is still a lot of uncertainty with companies as they're coming out with their earnings. But we put this on Swing Trader today as an early entry to try and get a little bit of juice out of this before that earnings report. But we will be out of it before the earnings report. If you're doing more position size trading, then position trading, then this is something where if you do get that cushion, just like with Netflix, it could be something that allows you to hold through earnings.
Yeah, and if not, we do have our earnings option strategy. Don't know what the premium for this looks like, but Ken always every week does a roundup of those earnings options plays, although he is sick, so guessing someone else will be taking over for this week. But
I don't know if that means I am, so we'll
okay,
find out.
well, there you go,
from Chris.
Justin. Well, we'll have an earnings preview story for you, rounding up some earnings options plays that look compelling next week. But let's round out today's show with a look at gold miners, a group of interest that's bubbling up right now. So we're going to start off this section with a look at GDX, the Van Eck Vectors Gold Miners ETF, which shows you how if the maybe individual names in the group are extended, this might be a way to play the group.
Yeah, and one of the things we were noting on IBD Live today is that we were just seeing a lot of movement in a number of gold miners. So, Barrick Gold, symbol GOLD, was one that was moving a lot. We also were looking at NEM, that Newmont Mining, and FNV. So we saw a lot of movement in the individual stocks, but a lot of those, as you mentioned, are extended. So what's a way to play them? Play that group move, GDX or GDXJ, which is the junior gold miners. In this case, the GDX looked a little bit better to us, and this is coming out of a pretty nice cup with handle consolidation. So it has its own little breakout. Now with ETFs, we don't necessarily need them to be doing breakouts, especially like a market ETF like QQQ or SPY that are tracking the Nasdaq 100 or the S&P 500 respectively. We don't need those to necessarily come out of patterns, a couple with handle patterns. We can get those earlier on follow-through days. But when you do see those patterns form, it is kind of nice, a little bit of extra conviction in the group. And it's a way to play the group and not necessarily have the individual stock risk as if you played just one particular one. And especially with earnings season, right, in the thick of it right now, it can be a way that you don't have that earnings risk going into
Mm-hmm.
into that for a lot of these companies as well.
Yeah, all good points there, Justin. Thanks so much for joining me today. And
Absolutely.
thank you, audience, as well, for tuning in. And you can be sure that the conversation will continue tomorrow morning on IBD Live. We mentioned that gold stocks were popping up on our radar. We talked about how to handle Netflix heading into and post earnings, and so much more. So it's just a really great place to once again get grounded in that investing mindset, whether it's earnings, breakouts, swing trades, you name it, a little bit of everything.
Absolutely.
All right, everyone. Thanks so much for watching, and we'll see you right back here tomorrow.